Good morning, everybody. It's Thursday, October 17th, 5:25 a.m. Central Time. Grain markets are mixed to lower this morning. December corn futures down 2.25 at 402 and a half. November soybeans down another 8.25 at 971 and 3/4 into some fresh 2-month lows. December Chicago wheat down 4 at 581. December Kansas City wheat down 2.75 at 586. December spring wheat is higher to the tune of 3/4 of a cent, 621 and a half last trade there. Let's start off with this John Deere story.
So, John Deere is cutting more jobs in Iowa and Illinois. Approximately 300 workers will be laid off between the two states. The layoffs are not tied to Deere's plan to shift some of its production from the U.S. to Mexico. Instead, the cuts are the result of reduced demand for farm machinery amid lower grain prices. Earlier this year, Deere laid off more than 2,000 workers due to reduced demand. The company also trimmed hundreds of workers' salaries.
The U.S. farm economy, as I have argued in the past, is in the midst of a full-blown recession, and John Deere knows it, and they know that the outlook isn't good. A couple weeks ago, we ran a story about the most recent ag economy barometer from Purdue University and CME Group, and they said that farmer sentiment was at its lowest level since 2016. I would argue that things are worse now than they were in 2016. So we've got low grain prices as we did through a lot of 2016, but two things are different. One is that interest rates are higher, and two is that inputs are drastically higher as a result of inflation. So I would make the argument that things are worse than 2016. I would make the argument that we, again, are in the midst of a full-blown ag economy recession, and John Deere is acting accordingly. John Deere, I'm not going to say it's their only job, but one of their biggest jobs is to provide shareholder value and return. And their stock price has acted pretty darn well, all things considered. They're up 2.4% year to date, which is not as good as the S&P 500, but it's not bad either. They're up 7.3% over the past 12 months. So I think as we move forward, you're going to see more stories like this. You're going to see more layoffs in these ag companies. You're going to see more of these companies kind of trimming the fat because they know that things are tight and may very well get tighter. It's not a good situation, as you guys know.
USDA reported a large flash sale of corn on Wednesday. U.S. exporters sold 64 million bushels of corn to Mexico. Of the total, 41 million bushels are for delivery during the current marketing year, and the remaining 23 million bushels are for delivery during the next marketing year. U.S. exporters also sold 13 million bushels of corn and 6 million bushels of soybeans to unknown destinations for delivery during the current marketing year. The large sales demonstrate that end users see value in U.S. grains at the current price levels, a situation that could provide a price floor for the market.
This is finally a sale that you can get halfway excited about. It's not 100,000, 200,000. You're talking a million metric tons of corn for this year, and then they threw some in for next year as well. Mexico will be our largest corn buyer this year. They've already got 46% of all commitments, and I would fully expect them that at the end of the year, they'll be the largest buyer. The thing about Mexico, and I'm not going to rain on the parade because this is good news, but the thing about Mexico is that I think their appetite for corn is largely a known factor. I think the trade knows that there's some kind of ceiling on exactly what they can import and what they'll buy from the United States. Whereas if this was China, I know I talk about China all the time, but if this was China, the trade doesn't know what the ceiling is. China can come in and buy a lot of corn and really move the needle. I just feel like the Mexico import program is largely kind of a known commodity. This sale, this million metric tons for this year, this is something that they do around this time of year, almost on an annual basis. So it's not totally shocking. It's definitely good news. It's great to see. Corn futures did pop. I'll call it a small pop on this news. And now we're back lower this morning. When you look at a decent corn chart, we had this nice uptrend in place from the August low. That uptrend has been busted. And now you've got to hope that we hold those September lows, which were in the 395 to 401 range. And we're creeping in on that range here early this morning.
Brazil is likely to see more above normal rainfall during the next 10 days. The return to a more normal seasonal wet pattern has clearly arrived. Soybean planting, which has been delayed, should be able to move quickly in many areas now that moisture has returned. Any premium associated with dry weather in Brazil has likely been erased or is being erased from the soybean market.
Yeah, so they've got more rain in the forecast. Here's a couple good maps from our friends at Crop Profit. Over the previous 7 days, you're more normal in terms of rainfall through the 14th at least. Brazilian soybean areas saw 94% of their normal rainfall over the last week. Argentina actually saw above normal rainfall in their soybean areas. And the forecast, if you want to look at it as a percent of normal, is going to be above normal for the next 10 days in terms of rainfall. So as Mackenzie mentioned, if there was any weather premium associated with dry weather and planting delays in Brazil, it's erased or is in the process of being erased as we speak here this morning.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of this week's premium videos?
Matt Bennett was on yesterday, and I titled the video, Send Matt Your Hate Mail, because Matt gave us an honest assessment of what's going on with the crop in his neighborhood. The crops in his neighborhood are very good, and it's not the only place where crops are really good. We talked about marketing. We talked about the decision to store or sell. We talked about basis. We talked about calendar spreads, among other things. The video that I did with Chris Barron on Monday, I've talked about it every day this week, and I think it's of extreme importance if you're marketing grain. Hidden interest costs and storage. If you're going to put unpriced corn or soybeans in the bin and you're still paying interest, you need to know what the interest expense is on a daily, weekly, monthly basis, maybe on a per bushel basis. Chris provided a tool that will allow you to do that. If you don't know what you're paying in interest, and it is kind of a hidden cost, it's impossible to market your grain effectively. It's a big deal now. It wasn't a big deal 3 or 4 years ago when rates were low, but we're in a different world now, and you've got to understand how all of this works. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. Everything is super easy to do on your phone. You can sign up on your phone in about 30 seconds. We do Apple Pay, Google Pay, credit card. All of the videos are accessible on your phone through one click. No login instructions, nothing like that. This is just an informational service. I provide cash grain marketing recommendations. You can follow them. You can not follow them. You can do what you want with it. But we don't want to sell you anything else. We don't really want to talk to you. We just want to send you our info and charge you $50 for it. So check that deal out, guys. If you signed up this morning, I'll forward you a copy of this morning's email.
Soybean futures declined on Wednesday amid concerns of increased tariffs. The November 24 soybean contract lost 1.3% to close near $9.78 per bushel, its lowest daily close since September 10th. Traders remain uneasy about a potential Trump presidency, which would likely result in increased tariffs. Analysts believe a rise in tariffs would cause China to pivot away from U.S. soybeans and instead rely even more heavily on Brazilian exports. Vice President Harris is also considering a tariff-based approach to combat China's unfair trade practices.
I don't know about this headline. I'm calling misinformation on this headline. I don't think soybean futures have dropped because of an increased likelihood of a Trump presidency. On the list of reasons why the soybean market has fallen to fresh 2-month lows, I think that item is very low on my list. First, you've got the just general projection for a hugely burdensome supply and demand situation. And as it stands today, I have no reason to doubt that this projection for a record all-time high ending stocks to use ratio on a global standpoint, I have no reason to believe that it's not going to be reality. The U.S. crop is damn good. Maybe it's not as big as USDA says it is, but it's pretty darn good. And with the arrival of these rains in Brazil, you've got to make the argument that monster crop there is at least a possibility. I'd put lackluster U.S. export sales up there. We've got the third worst book of export sales in the last 10 years. The Trump presidency idea and the tariffs, I just wouldn't put high on this list. The soybean chart looks like absolute garbage. It looks very probable that maybe you go down and test that 955 low from August. You've got a trend line that's going to sit just below $10 here today. It does not look good at all.
The increasing likelihood of Donald Trump becoming president has bolstered Bitcoin. As of mid-afternoon on Wednesday, Bitcoin was trading around $67,869, its highest level since late July. Year to date, the cryptocurrency is up more than 60% and nearing its all-time high of $73,798. The recent surge in value is due to increased odds that Trump will be elected president next month. Experts feel that a Trump victory would be beneficial to the crypto market due to his support for the industry. Seasonal and cyclical factors can also be credited for the recent gains, since October is known for being Bitcoin's most profitable month.
Again, I don't know that Trump is the reason for the Bitcoin rally. I like talking about Bitcoin because people hate it so much, and like people get triggered, and it's great. I can't wait for the comments because people are gonna hate. Yeah, guys, it's a scam and a Ponzi scheme. It's been going on for 15 years, and it's worth $1.4 trillion. Maybe it is. Maybe it is. I'm not on that page. I think this is the bigger headline this week. BlackRock CEO Larry Fink says Bitcoin is an asset class. Larry Fink, I don't think, if I had to guess, probably doesn't know a ton about Bitcoin. He knows that they launched a super successful Bitcoin ETF and that they want to sell more of them to the consumer. And that's why he has positive things to say about it. That would be my analysis of that. Looking at a Bitcoin chart, you've got very clearly what we'd call a bull flag pattern on the chart. And we're still in the flag channel, basically. And if you break this thing out above 68, 69,000, the charts would say that it's off to the races. But until then, you're still kind of range bound between, like, call it 50,000 and maybe 68 or 69. So maybe you break out, maybe you don't, but it has been strong this week. What did cattle do yesterday?
Cattle futures were mostly lower. Live cattle were 82 cents lower to 32 cents higher. Feeders were 42 cents to 97 cents lower. Box beef was higher once again. Choice ended the day at 319.13. That was up 230. Select ended the day at 292.37. That was up 28 cents.
Outside markets mixed this morning. U.S. dollars flat. The S&P is up 22. Been awfully strong. Bonds are off just a little bit. Gold's up $12. Crude oil is unchanged at 69.82 in the December WTI. Have a great day, guys. We'll talk to you Friday.